Hi and welcome to Carnegie and our interview with Ependion. My name is Markus Almerud. I'm an analyst here at the bank. I got with me Jenny Sjödahl, who is CEO at Ependion. Hi, Jenny.
Hi there.
And a warm welcome.
Thanks.
You released Q1 earnings yesterday and puts and take, and there was a quite strong reaction in the market on the report. So a mixed report. Maybe starting with the order intake, which was maybe one of the highlights. It was still quite strong, and you write in the report about high activity in the market still. But at the same time, you also write about the uncertainty, which obviously is quite high at the moment. Maybe elaborate a little bit on what you're seeing on the ground, and what are your customers saying, seeing, and talking about?
Yeah. So, you're right. The order intake was the highlight of the quarter. We see a 5% increase year on year, so that's good. When we came out of quarter four, we felt, slightly optimistic about 2025. We saw the activity levels going up, but it was too early for us to say that, now things have turned around. And what has happened now in Q1 is, of course, that uncertainty levels have increased for many different reasons, which makes it more difficult, of course, to understand how are our customers going to react on that regarding investments, projects, and so on. But I think in general, we still see a good activity level. We have strong opportunity pipelines. We have interesting discussions going on with customers. We know that there is a need to invest in the power grids, etc., etc. So there are pros and cons, definitely, but it's hard right now to tell what's going to happen going forward.
Yeah, but a high activity level is the right way to describe it.
Yeah.
If I look at sales, because it's balanced with the order intake right now, and it fell from a high level last year. Is there anything in it which is hampering sales? Is it any products you don't get out, or is it anything, or is it just the comparison which is bringing sales down on a year-on-year basis? Yeah,
I think there's nothing stopping us from delivering, so to say. It's more the lower order intake that we have seen for some time in Westermo, for example, that leads to this slightly lower level. We had an effect in the comparison quarter of a very big backlog and delayed deliveries from 2023 in beginning of 2024. So that's why the comparison is very high. But there's nothing stopping us from delivering right now. It's running smoothly.
So the higher order book, the strong order book, like you said, it's growing, also give you some confidence for the coming quarters from that perspective?
Yeah, it depends, so to say. We need to see the order intake keeping up now in order for us to keep the sales as well. But for Beijer Electronics, definitely we do see a strong order intake in the quarter, and that, of course, brings stability for the coming period as well, I would say.
And if we go to the business entities one by one, and we're starting by Westermo, which so how do you experience demand in Westermo in the different end markets, and maybe particularly in train and energy?
We see a high activity level among our customers. We see our bigger customers in the rail segment having very strong order books, so that is positive. We have the establishment in India that is really starting to take off now, which is going to add volume to Westermo. In the energy sector, also a good activity level, and the investments need to happen in the power grid. The modernization needs to happen. So there we are not so worried that investments will be postponed, so to say. And we are, working, taking steps all the time to move further into that market. And now, of course, with the acquisition as well, that further strengthens our position there.
Yeah, and we'll come back to the acquisition in just a second. But looking at profitability in Westermo, Westermo manages to defend the margin quite well despite falling sales. What's the driver? Is it good cost control? Is it mix? Because we've talked many times about the leverage effect, but still the margin keeps up.
Yeah. It has a lot to do with operational excellence, actually. During the crisis, the component crisis, we were running the factory in a very inefficient way, just focusing on getting stuff out. And now that we have a more controlled situation, we can really focus on bringing material costs down, making sure that we run the operations in a really efficient way. So I think it's a combination of that, operational efficiency, and also good cost control on the overhead side as well.
And looking at the cost base in Westermo in particular, Are you happy with where you stand, or is it there's always more to do? But are there any big parts, or when you talk about the cost cuttings, is it mainly in Beijer Electronics?
At this time, it is mainly in Beijer Electronics because that's where we see that we have the challenge profitability-wise. Westermo, we will continue to monitor, obviously, and make sure that we can keep a stable profitability there. But it's not, for now, it's Beijer Electronics.
Okay. And continuing with Beijer Electronics, and maybe also here starting with the order book, because also the order book was maybe the highlight for the entity as well.
Yeah.
It was quite good. And can you say what's demand like for the products? And again, here is an end markets sticking out. Marine, you've highlighted, for instance.
Yeah, I think marine is definitely sticking out there. We see a very stable development quarter over quarter, so that is positive. We see Asia, if we talk about regions, Asia picking up from very low levels, but still, so that's also a positive sign. And I think the highlight in the quarter was that we managed to increase the order intake of our core product, the operator panels, by 18%, and grow order intake despite the fact that we have phased out volume throughout 2024. So I think that's a good sign.
And when you talk about the operator panels, it's not the new family which is driving this? It's not X3, or is it X3 which is driving
this? No, not yet. We have launched the first steps of X3, but that is not yet driving this increase. It's actually the X2 series that is driving the increase. So the X3 effect is still to come, so to say.
Interesting. And also, it's not, you didn't see a drop in 2024, which is explaining some of this. It's genuine demand for the product which is driving this.
Yeah, that's what we see. We don't see that customers are keeping inventory anymore. You know, we do see that what is being ordered now reflects the demand quite well.
So going to the margin, because the margin falls back quite a long ways, and there is a mix effect here, but we've seen that in previous quarters as well, the mix effect. We're talking about the phasing out during 2024. And you have the FX. So explain a little bit what's pushing, what's holding the margin back.
Yeah, you're right. There is the mix effect. We have been shipping out the last shipments of the phased out products that affects the gross margin for sure. We have the FX effect, but that's just, you know, what it is. And then, of course, we have restructuring costs also taken in the quarter. But despite that, we do see that the overall earnings capacity is not where it should be. And that is also why we are taking this cost measure now, to make sure that we can come back to a decent and acceptable profitability level in that entity.
And maybe we hold there on the cost savings. Explain a little bit about the cost savings that the measures you're taking.
Yeah, it's a pretty significant step actually that Beijer Electronics has taken. We are taking out 33 people from the organization, mainly in the US and in Taiwan. And that corresponds to a 12-month running cost saving of 22 million Swedish kronor. So if you compare that to, you know, the earnings level of Beijer Electronics in general, it's quite a significant cost out activity.
And most of that will come in 2024. So most of the 22 million, I think 18 you wrote, if I remember
this
correctly.
Year, 25.
This year. Yeah, 25.
Yeah.
But if you look at the phasing throughout the year, given that it's US and Taiwan, is it pretty immediate, or is it on any lag effects?
No, there's no lag actually. All the cost is out.
It's
now.
out already?
Yes, already. Yes, so we will see the effect now from Q2.
Interesting. And I mean, I got to ask, so the margin was, call it between 8 and 9% if you put back the restructuring cost.
Yeah.
And you do have the margin target of 15% for the group. But I know that we've been discussing before, and also with Christine, who's the CEO of Beijer Electronics, that definitely see a potential to get to 15%. And given the margin volatility that we have seen, and given the levels that we see right now, what gives you the confidence that you can actually reach 15% in Beijer Electronics on a sustainable basis?
Yeah, I think the whole idea with the new strategy that was launched in Beijer Electronics by Christine and the team was to to refocus the business on a few key segments, cleaning up the product portfolio, which is what we have been seeing now. And that transformation has taken some time, and it has had some effects definitely on the profitability. And of course, you can always wish that things would, go faster. But I do believe that as we continue to implement that strategy with the focused key segments, focusing on the customers where we can, bring good value and therefore also good prices for us, in combination with, of course, a bit of tailwind when it comes to the market demand, because the volume, of course, plays a big role here as well. I am confident that we can reach that level going forward.
Because also here the gross margins are maybe lower than they are in Westermo, but they still, we've been still talking about 50+% gross margins also in Beijer Electronics.
Yeah, and with the phasing out of these low margin products, we definitely don't see a big gap between Westermo and Beijer Electronics when it comes to gross margin level, actually, going forward.
And in the shorter term, you're right that you have no products. These low margin products are completely out of the order intake.
Yes.
And we were talking about the operator panels being up 18% year on year. So I assume that the margin in the order book is actually much higher than what we're seeing right now on the books.
Yeah, it is healthy, definitely. So, but even if you look at the operator panels, of course, there could be some regional mix effects also going forward, but they will be much smaller, of course, than what we have seen now.
And then maybe a couple of words about Welotec. So you announced the acquisition of Welotec, or the proposed acquisition of Welotec.
Yeah.
It's a complementary acquisition. It adds a new technology. Tell us a little bit about what is Welotec.
Yeah, I'm very excited about this acquisition, actually, because it brings, as you said, two things. It really significantly strengthens our position in the energy segment, because Welotec have a lot of expertise and a very good offering for the substation automation market in particular. And the other thing is that Westermo, who has been active in industrial data communication since its inception, is now moving into a new technology space, which is the edge computing. And that is really about not only shifting data from, with the networks, but also being able to analyze and compute data locally in different applications. So that's a big step forward for us, and I see a lot of opportunity there.
And given that you are in the energy segment and they are big in the energy segment, do you see an overlap in terms of customers, or are they also complementary, so that we could expect over time to see sales synergies also on the customer side?
Yeah, there's both, actually. There are a few customers that we have in common, but I don't see that as a problem. It's actually a good thing that we have even stronger relationship with these customers. But there's also a large number of customers where either Westermo has good relationships or Welotec have strong relationships, where we can benefit from these customer relationships from both sides. So I definitely see sales synergies going forward, and that's also where we will be focusing our integration efforts on initially.
Yeah, because I assume my read is that the acquisition is not about cost, it's about sales.
It's about sales primarily, yes.
So there's not any big cost synergies that we should expect from this?
No, I don't see that, no.
But with that said, though, the margin is a bit lower than you have in Westermo. Is there potential to raise the margin in Welotec, or are they where they should be?
I think over time there's definitely potential to raise the margins. What we have seen from previous acquisitions is that typically smaller companies tend to have a slightly lower margin, and then as you start to work with price management, as you start to work with your operations and suppliers and what have you, we definitely do see a potential to step by step increase that level.
Okay. And then maybe finally, the thing that everyone's talking about and everyone's worried about, the tariffs. Just explain what are your impact, what are you seeing, and how is Ependion affected by the tariffs?
Yeah, first of all, if we look at the volume exposure, so to say, we have around 300 million of yearly volume sold into the US. Most of that in Beijer Electronics, and then a part as well in Westermo. And we have made the mapping, of course, given what we know right now about the impact. And I would say that right now Westermo products are exempt from the tariffs altogether. That can, of course, change. We have seen quick changes. And in Beijer Electronics, we are looking at the flows of products from Taiwan, from Sweden into the US to see how we can optimize that from a tariff perspective. So I think we have a good view on the situation, and it will not have a significant impact on us. And of course, the basic principle is that whatever impact we get, we will compensate for with price increases in North America.
Perfect. Jenny, thank you very much for coming here to talk to us, and I'm looking forward to see the effects of X3 and seeing Welotec being integrated and lots of stuff going on.
Thank you.
So thank you very much, and thank you for listening.